Next on stage, Cambridge Mobile Telematics.
Good morning, everyone. So, my name is Marian. I'm the Managing Director for Cambridge Mobile Telematics Europe. And in order to fine-tune the content of my speaking slot better, let me just kindly ask you to raise your hand if you're coming from an insurance company. It does not surprise me. It's an insurance conference. But great. Can you please raise your hand if you have been involved with telematics programs in the past? Thank you so much. That will allow me to choose my words in a smarter way. Cambridge Mobile Telematics has been in the space for more than a decade. And that's something that really allowed us to observe many different programs. How do they roll out? What is the typical behavior of consumers? And most importantly, what is the key success factor in many of these programs? So we launched more than 100 insurance telematics programs worldwide. We are getting data points from 172 countries. And there is one thing that really stood out in all of these programs in terms of how to maximize the win out of the insurance telematics programs. What is the key ingredient that makes it successful? What really differentiates a successful usage-based insurance program from non-successful usage-based insurance programs? You might have heard, but insurance telematics technology brings many benefits. We are talking about significantly higher customer loyalty and retention. We are talking about lower claim cost, improved combined and loss ratio as a consequence, faster response time, faster claim settlement time, and so on and so on. But one thing that is really important to understand is where is this result actually coming from? And it comes from a very particular user segment, from a very particular customer segment. We call it the engaged users. The engaged users are those that produce most of the benefits for insurance telematics programs. So, the more engaged users we have in a program, we can enjoy a higher scale of the benefits we achieve. So, engaged drivers are 65% more safer than non-engaged drivers. Engaged drivers are 57% less distracted than non-engaged drivers. There are a number of other benefits that we are seeing in the engaged user base that are not necessarily to be seen in a non-engaged user base, such as significantly higher retention, significantly lower claim frequency, and of course, much better business book. So, clearly, if the key success factor is to have the engaged user base, the next question is, but how do we engage them? How do we make the user base engaged? And there's no silver bullet, but actually there are two. And those are structured and automated engagement program that takes care of engaging with the users. But the second one, less covered in the industry and in the conferences, value proposition. And we can only achieve the results if both of these aspects are properly addressed in any insurance telematics programs. So at this point, it's a hypothesis. But let me share the data point validating the hypothesis. And this is probably going to be the most complex piece of content I'm going to share, so I'll need your attention. And from that point onwards, everything gets much better. This is it. On the x-axis, we have time. Number of days users stay engaged with the telematics program. On a y-axis, we have percentage of users that remain engaged with the insurance telematics program. In a blue color line, we can see a program A. It's a real program. These are real data points, clearly. with a suboptimal value proposition. It's a blue line. So what we can read from that is that after 2 years approximately, almost the complete user base is gone. The value proposition does not work, and a structured engagement program has not been applied. Light green is what happened year on year when a structured engagement program has been applied to program A. What we can see is that the retention significantly improved, but it is still not at the point where we would like the program to be. Red line is a program B. It's a much better value proposition, but still, after 2 years, we are talking about some 40% user retention. It's not good enough. When we applied year on year structured and automated engagement program on our technology, we achieved after 2 years for the program B a retention of 86%. So this is just to demonstrate how there's no one simple step how to achieve the best result we can with insurance telematics technology, but how we actually have to cover both. Everything that the technology can achieve, but ultimately it's about the value proposition insurance company defines for their user base. And as a technology vendor, of course, we talked a lot about what we can do with the technology to enable structured and automated engagement programs. We talked less about how to build a proper value proposition that's going to engage users and ultimately harvest all the benefits of insurance telematics programs. What can also be observed from here is that while value proposition is part of the insurance company responsibility, automated and structured engagement program is usually part of the technology vendor responsibility, which means and calls for collaboration. Very important. One slide captures the essence of the key success factor for the insurance telematics programs. So, to move on, how do we define a good value proposition? What is a good value proposition? How should insurance companies think about a good value proposition and how to define it? Ultimately, it comes down to what is it that people really want to have. Everything that we had an opportunity to observe over the last decade falls down in 3 main categories of what user wants. And it has been strongly validated with data points. It more or less comes down to a known success recipe. And it's this. It's 3 things. Cost savings. In order of priorities. Number 1. Safety and support. In order of priorities. Number 2. Cause and purpose, which is something we can tackle once we properly address point 1 and 2. Very important, depending on the market, more or less, but generally present in every successful program worldwide. So on the cost saving, rather than to theorize, let me switch and share information that has been made available by Progressive in a call for investor in Q1 2023. What Progressive shared ultimately is an update of their more than a decade-old Snapshot program. Snapshot program is now version 5. It's one of the well-known insurance telematics program in the world. Progressive has been a pioneer in the industry. And they explained how they create value for their users. They realized that cost-saving opportunity is really important for their users. So what they did is they defined a business model that enables exactly that. Green indicates a level of discount user can enjoy when joining the Snapshot program from Progressive. Red is a volume extent of the surcharge. Progressive started with discounts, only discounts. And of course, the questions have been raised about sustainability, viability of such an approach. Because how much discount can insurance company really give? Depends on the benefits they can get. Now, almost a decade ago, Progressive introduced a surcharge. And that's kind of, in the European market, frowned upon. We cannot introduce surcharge because everyone is afraid customers will leave. The answer is yes and no. And the answer is not every churn is necessarily a bad one. Not only did Progressive introduce a surcharge 10 years ago, almost 10 years ago, but actually they kept it. They always kept it. Not only did they keep it, they increased it. Because the surcharge allowed them to increase the level of discount, which is what users really want. So today, Progressive program allows for 45% discount on the premium. At the same time, it can happen that the user is charged with 60% extra on the premium. So the result and outcome of such approach is more or less intuitive, but not necessarily. So what happens is that those users that enjoy the benefit of having a discount are more loyal to the company. But they're also less risky, which is why it matters for them, for us, for insurance company, for them to be loyal. We want to keep them. Progressive wants to keep them. And those that have been surcharged have been less loyal than a non-telematics customer, which is actually what we want. If we have a program and technology that can really enable a fair way to price the users, if we really have a robust algorithm based on a lot of data points that can allow for that kind of a fair pricing. So this is what happens. Indeed, good drivers, safe customers, profitable customers stay, non-profitable, more risky, leave. And that is what gives a significant and positive and strong contribution to key KPIs of an insurance business. As much as it has not been adopted to a large scale in European market yet, UK has been implementing some similar measures and approaches to the program. They would simply cancel, there are a couple of insurance companies, the first 10% of the drivers, non-extending the policy. So that's one way how to deal with it, without a surcharge. For both of these approaches, it's very important, once again, to have a very, very reliable rate-to-risk match, enabled by the proper driver scoring based on telematics data. So ultimately, the good pricing, proper pricing, telematics-based pricing, gives a lot of benefits for the users, which is the key point, but it also gives a lot of benefit for the insurance companies. Telematics pricing gives 2 to 3 times, or even sometimes we have seen higher, a better match rate to risk. It gives 20 to 60% lower claim cost and a better retention of the safe customers, of non-risky customers. Now, the second key component of the good value proposition is safety and support. And when talking about safety and support, we need to think about it, we can think about it in these 3 categories. How do we prevent risks? How do we act when the risk realizes? And how do we support customer after the risk has been realized? Again, instead of going into a theoretical discussion, I'd like to share a real-life example. This is a Progressive use case. It happened with a customer of Progressive that is using, amongst others, Cambridge Mobile Telematics technology. And an accident happened. And as you can see from the photos, it was rather a severe accident. Within 2 minutes, based on the sensors that we have in the car, Cambridge Mobile Telematics tag, Cambridge Mobile Telematics SDK. The accident has been detected automatically. The crash has been detected automatically. In 2 minutes, push notification was delivered to relevant parties. In 3 minutes, automated call took place. In 4 minutes, emergency, ambulance and tow service have been dispatched. In 10 minutes, claim has been filed. What did the customer, the driver, say? Quote, "I was unable to call for help at the time, but help called me." It is about the service. It is about the good quality service that the technology enables. And ultimately, it is about a loyal customer base, and it's about creating advocates because we support them at the time when they need. It goes into the direction of having a good, excellent customer experience. A second real-life case with a progressive customer that had Cambridge Mobile Telematics technology inside. It's a little bit different case. The accident was not that severe, but the policy has been closed just 2 days before the accident has been reported. So, in a normal situation, a driver would be stuck in a tedious and potentially much longer processes of verifying the validity of the claim. Again, within 2 minutes, push notification was delivered. Within 4 minutes, automated call took place. And within 12 minutes, claim was filed. The claim has been paid out in a much shorter time frame, again resulting with an excellent customer experience, loyal customer base, better business. To put some numbers on it, with telematics technology we have, but in general, what we observed is that digital ethanol is completed with a much higher rate, 90% that without the telematics technology. And submission is 140% higher than without telematics technology. What does it mean? It means that the automated technology reduce significantly number of friction points with the user so that the whole flow is much more seamless and enjoyable for the end user. And that's what creates experience and a loyal customer base. On the other hand, adjusters were able to act in a much more swifter way, in a better way. So instead of making a long call with a customer that was involved in an accident and customer does not want to have a call, instead of 30 minutes, it comes down to 15 minutes, almost 50% reduction in a call time, because the data is already there, the data is available. And time to settle a claim from more than 15 days on average comes down to 8 days, because the data is available automatically through the seamless ethanol process. As mentioned, it is about customer satisfaction. So what we measured is that the customers that have been using our crash detection system are almost 2 times more loyal than customers that then not necessarily have been using the system. The value of this particular component of value proposition is so high that we see other industries are also implementing it beyond insurance because the customer wants it. They want to have a peace of mind, they want to have a safety. So we have an example where security agencies incorporated that into their mobile app. We have examples where telecom companies incorporated that into their mobile app. And most recently what we shared, we partnered up with Hyundai, so car manufacturers also want to have this technology. Hyundai is using our technology as well, which only indicates market trends and where everything is currently moving and evolving towards. The third component of the value proposition, cause and purpose. As much as people value it, it has to be put on the market in a proper way. We have all witnessed, and around the world, but also in the European market, severe weather effects are making more and more damage for the insurance losses and contribute more and more to insurance losses than ever before. They comprise around, they're at the level of 18 times of man-made damages. And there is a market awareness and concern about what's happening with the environment. And it's that high that not only consumers are aware of it, but also it started to get more regulated. Relatively new thing is the introduction of a corporate sustainability reporting directive that's coming into place of non-financial reporting directive. CSRD is much more prescriptive than NFRD. And what CSRD requires, amongst others, insurance companies to do, I'm quite sure everyone is aware of that by now, is to report on a carbon footprint, to report on CO2 emissions. And it's not only that we want to measure it, we might as well want to change it and reducing. And that's where we step in. It's not only about measuring the risk, because technology can enable us to measure CO2 emissions as well. And by collecting this data, by processing this data, by aggregating this data, feed it into forms that are compliant with the CSRD reporting directive, that's helping to any corporation that is subjected to that particular regulation. But most importantly, we can make an impact. We can make a positive impact, because it's not only about measuring it and saying we have this much CO2 emissions a month. It's actually about changing it. And we are very advanced when it comes to changing a user behavior for the purpose of reducing his risk. So we apply that methodology to change the user behavior and reduce the CO2 emission. And this is what we achieved. With the engaged user base, we achieved 30% less CO2 emissions with the drivers. That's how powerful technology can be when deployed properly, especially when it comes down to engaged user base. We are Cambridge Mobile Telematics, on the market leader when it comes to insurance telematics technology. We have a booth outside. Happy to help, happy to discuss and engage in a dialogue. Thank you so much.